Give me your sense then in terms of how critical a situation Saudi Arabia finds itself in as those foreign currency reserves begin to dry up.
Well, it's a very critical situation for Saudi Arabia and other weaker countries with weaker fiscal positions in the region, Bahrain and Oman particularly. The drop in FX reserves was very, very sharp. As you mentioned, reserves are back to the 2011 levels. However, we believe that part of the drawdown in reserves, our initial analysis is that it was not only to cover the fiscal deficit, but also the support measures announced in March, both fiscal and monetary, to support the economy. But nevertheless, that does highlight the higher funding requirement for the government this year. We expect to see further drawdowns in FX reserves. We think pressure will increase in the second quarter of the year with lower oil prices and production. And we believe that the government will look to focus on raising debt to limit the drawdowns in reserves further, though there will be more.
Monica, great to have you with us this morning. So Al Judaan hinted that it would be 120 billion reals of a drawdown. We're pretty much there. Where is the inflection point of where they stop drawing down on the reserves and they go for a much higher? And can you qualify that in terms of how much higher in terms of debt issuance you expect this year from Saudi?
Absolutely. So I think we'd be quite close to that inflection point as well. And this reserve drawdowns comes on the back of deep drawdowns also that we saw in 2015 to 2018. 2019 saw a modest increase. Our forecast for government debt is that they'll increase from about 24% of GDP to over 30% of GDP this year. Some official forecasts were already given on what the government plans for raising debt. We believe it could actually be a bit higher because our forecast for a fiscal deficit for the full year is slightly larger, is larger than the government's.